and why we saw the huge market reaction as a result of this is because the way that markets have priced these companies, these big tech companies and AI, is almost as if like there's no downside, right? Like almost as if things are just going to go exactly according to plan. And so the Fed is back in focus. That said, maybe just for a short little bit here this time, finally. So we have a lot on the Fed, as well as certainly quite a bit of market moving information this week, let's call it, with AI, big tech earnings, you name it. So we will be covering a lot. We also have a great question of the week from Janet around entitlement programs, which we will cover, although honestly, it might be a little shorter because we have so much here. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, or trends that we're watching, and hopefully weed out a bit of the noise along the way. And again, this week is just full of newsworthy items, let's call it, to share. Before I get into the big tech earnings and AI story of the week, I do want to spend a little bit of time on the Fed. So just yesterday on Wednesday, we had the Fed decision and press conference to follow. What I will share is the simple version of it is that the Fed did not cut rates. They put a pause on where they go with interest rates from here, which if you listen to the weekly there just last Thursday, we had kind of shared was our perspective going into this. In general, I think that was kind of the market's perspective as well. I think that's where most people stood, and that certainly ended up being the case here for the decision on Wednesday. And I think the market reaction suggested that as well. Really, there wasn't a big shift in market reaction after the Fed decision or throughout the press conference. Obviously, some up and downs throughout, but compared to historical Fed decision days, this was a pretty light day in terms of volatility. So good to see, I guess, to some degree. Obviously, it meant that most people were thinking the Fed was not going to cut rates going into it. But I think what was maybe most interesting, which probably is not much of a surprise either, is what came kind of between the lines on the press conference. Obviously, they didn't cut rates, but they also shared that they're in no hurry to cut rates again. So we'll see what that means. But nonetheless, there was quite the shift here for sure, to kind of suggest that any rate cuts are not in sight for the foreseeable future. They also warned that inflation remains somewhat elevated, which in the same breath, they said that they're sticking to their 2% inflation target. So, I guess that might warrant the non-cut, but it's really interesting to hear that after all of this conversation over the last 3 cuts, I think it's been, about how inflation was in check. Now, all of a sudden, that has switched significantly. And, keep in mind, we're not at the 2% target either. So it makes sense why they would pause here, but the prior cuts are, interesting because they had kind of claimed victory on inflation when, as you guys know from listening to us, certainly we don't feel like that necessarily has been the case. So we'll see where it goes from here. But obviously, the big things to watch moving forward are going to be inflation trends. It's going to be the labor market. They had highlighted the labor market strength as well, and then the economy strength. And those 3 things are where we're really going to be paying attention. And I should say, maybe even more importantly, the Fed will be paying attention in order to determine any sort of direction around rates from here. All right. I will kind of put a pin in things on the Fed side of things there, but there is still a lot to cover on big tech as well. So just yesterday we had pretty significant earnings day. So bear with me a little bit, but I believe we had Apple, Tesla, I think IBM was in there. The gist of it is we had quite a few large tech companies that had reported yesterday. Microsoft, I believe, was in the mix there too. And a lot of interesting takeaways, let's say, from that. But the most important thing I wanted to highlight is this goes all the way back to Monday, where we had the big news around this Deepseek AI competitor, let's call it. Now, to be fair, I think there's maybe not the same degree of technology necessarily in this Deepseek situation. However, what I did want to point out and why we saw the huge market reaction as a result of this is because the way that markets have priced these companies, these big tech companies and AI, is almost as if like there's no downside, right? Like almost as if things are just going to go exactly according to plan and nothing will disrupt it. But the reality is, in America and in business in general, the bets are probably higher, should be higher, that somebody will come along and compete with these folks, rather than the assumption that just because they are here now, they're going to be the winners forever. Now, don't get me wrong, these are giant tech companies that are run very, very well, have a ton of resources. They will likely be a player for a long, long time. But the reason I think we saw such a big reaction earlier this week is because it showed that competitors can come out and can disrupt things pretty quickly, which is good, right? That's what a market is all about. So just keep that in mind. I think, as we look, especially at some of these larger companies, these types of things might continue to surface where there's a little more competition moving forward, which I think is a good thing. But obviously, it might affect some prices when the price reflects perfection, if that makes sense. So definitely some food for thought, and definitely an interesting story this week, especially with earnings, kind of tying into all this as well. Be sure to tune in next week. Before we get to the question of the week, just kind of a quick little teaser at what's to come. We have income, spending, and inflation all tomorrow, so we'll make sure we cover that. Plus, we kick off jobs week, so definitely a lot next Thursday. But before we break, great question of the week from Janet, which is around Social Security and Medicare, let's call it, right? So obviously, with the administration change and conversations, there's a lot of concern around what might happen with Social Security and Medicare and some of these government programs. Again, we have covered a lot today, so I'm going to keep this much shorter than I might typically, or honestly, than it might warrant, because it is a great question. But what I will share is that a lot of times the questions we get about these programs are from folks that are either already taking them or really close to being eligible for them. My perspective is that I think it's very unlikely, no matter what happens, that any changes would impact folks who are already like in that camp, essentially. Now, there might be some things in Medicare that might change a little bit, or whatever, but I don't think we're going to see drastic changes for folks who are already receiving Medicare. Maybe some small things, but not drastic. On the Social Security side of it, I think if you're receiving it, for anyone to just take that away or reduce it significantly overnight is very unlikely. Number one, client base, or sorry, I shouldn't say client base, voter base would drop significantly. But number two, a lot of the questions we get about this are from folks who have other assets. And although Social Security is important to them, it's not their sole revenue stream. However, a huge majority of people, believe it or not, in America only rely on Social Security. That is it for retirement. And so for them to just drop that on people who are only receiving and only expecting that could have huge consequences. Even still, people who are maybe closer to receiving it, I might suggest the same. I've shared this before, but Social Security has changed in the past as well. And when it did, it only really affected people who were much, much, much younger. Maybe that age gets up a little bit from the last time they made changes, but I think same general concept is more likely than not. So great question. Thank you for sending that in, and hopefully that answers it on a high level. But since we had so much to cover, I did want to make sure to touch on the Fed and the big tech side of things here this week. Be sure to tune in next Thursday at 3. We'll catch you up on spending, inflation, income, as well as jobs. In the meantime, have a great weekend, and we'll see you next Thursday.